Thank you, Jeff, for giving us this opportunity to me and my esteemed panelists to bring about this event. Unfortunately, I can't see the audience. I can probably, that is a new learning for us. And in fact, the topic also is pretty much almost on the similar lines. So before I start the event, I would like to start with the theme that reforms are not random and scattered decisions. They are systemic, planned, integrated, and future-looking processes. Pandemic has removed all distraction from these processes, and that is quite heartening. So with that, I welcome all my audience who have taken time to join me and my esteemed guests today, who will share their insights with us on what are the lessons that India trade has learned and what is the way forward from the fire hole of this pandemic. Let me start first by rotating the mic. I would request all my guests one by one to introduce themselves to you. I'll start with Garima, who is CEO of Agrocorp India. Garima, over to you.
Yeah, hi, good afternoon to everybody, and thank you, Anand, for giving the platform to speak. My name is Garima Jain, about our company, Agrocorp International. Agrocorp is a global agri-commodity trading house. It's founded in Singapore in 1990. Today is one of the leading integrated agricultural commodity and food solution providers in the world. I head Agrocorp India business. In India, we are growing exponentially. We are predominantly present in the grains and pulses complex, and also run our brand called as Sansar in India. So it's a pleasure to join and to be on this platform.
Thank you, Garima. Now I will invite Arun Menon, who is Managing Director and Head of Transaction Banking, Credit Agricole India.
Thanks, Anand. Good afternoon, everyone. So I manage what we call the International Trade and Transaction Banking division for the bank in India. Essentially, two parts. The international trade focuses on classical trade solutions to more structured balance sheet optimization products. And the transaction banking is essentially cash management services. A recently set up platform for us, state-of-the-art platform where we focus on providing solutions to our multinational corporate franchise. So that's the business I handle here, and pleasure to be at this event, at this virtual event, and looking forward to this great session. Thanks.
Thank you, Arun. Now to Raji Iyengar, who joins us from Singapore. She is Managing Director of India and South Asia for dltledgers.
Yeah, thanks, Anand. Yeah, thanks, Anand. So yeah, my name is Raji Iyengar, but right now I'm currently based out of Mumbai, Anand, and the others locked down here, and not really locked down, but can't travel now, yes. So yeah, my name is Raji Iyengar, and I've been in the IT industry for over 33 years in large corporate MNCs, both in India as well as Singapore. I'm currently the Managing Director for dltledgers, which is a Singapore-based fintech company. It's a private permission network with the underpinning technology being blockchain, and we'll talk more about it during today's talk. And I would say that, blockchain, for the others who are slightly unfamiliar with it, it's more of a philosophy than technology. And again, we'll talk about why it is so. So happy to join this call. Thank you, GTR. It's a little, what should I say, deja vu, because dltledgers is based out of Singapore, but we decided to set up India operations just after GTR India event last year. So it's great to be here.
Thank you. Thank you, Raji. Thank you. Now to Nandini Bhattacharyya, who's the Head of Trade Product of ICICI Bank.
Hi,
Nandini, can you hear me? Yeah.
Good afternoon. Good afternoon. Happy to be on this panel, and thank you, Anand. This is the first, right? A virtual GTR for all of us in India. And I sincerely hope that the next one is in person. At least I am dying to meet more human beings in person, except for the ones that I meet once in a while. And so I look after trade product. in ICICI Bank, and I wouldn't want to introduce ICICI Bank. I think that is fine. So I look at trade products, strategy, and digitization, and I think this has been a whopper of a year, irrespective of how extraordinary it has been, etc. In terms of trade and its whole digitization journey, which has been really, really given a lot of tailwind by the current pandemic. So everything has a silver lining. I think trade digitization got a solid upward push with this pandemic. So let's move on with the panel and see how we discuss today.
Thank you, Nandini. Totally echo your thoughts. Now to Chandrakant Salunkhe, who is founder and president of SME Chambers of India International Trade Center.
Thank you, and good afternoon to all.
Thank you.
First of all, thank you very much to GTR for inviting us to share our thoughts. And let me begin with my introduction. My name is Chandrakant Salunkhe. I'm the founder and president of SME Chamber of India. Also, I represent the India International Trade Center, SME Export Promotion Council. We have started SME Investment Promotion Council also, which is providing a platform to SME sector, particularly for channelizing the investment, trade finance, working capital, a lot of big business activity for SME sector. Since I'm here and all of you are looking for promoting your trades platform or trade services or trade finance, I will be happy to connect with my members, particularly those are looking for funding opportunity, finance opportunity, and mostly affordable trade finance opportunity, very easy and on their requirement. So with this word, I'm thankful to again GTR for giving us opportunity to share our thoughts, and let's begin with the discussion. Thank you.
Thank you very much, Chandrakant. Chandrakant, may I please request you to kindly adjust your mic because your voice was coming slightly feeble. I don't know if
okay, I will do
can
that.
Be fixed, but
next time I will get that. Okay, thank you.
Sure. Okay, so Chandrakant, probably I would start with you. Pandemic has impacted India businesses and especially MSMEs in more than many ways, right? But as any challenge brings you to the door of new opportunities, would you want to talk about some of them that has presented themselves to MSMEs during these trying times?
Can you hear me now? I'm loud?
Yes, we can hear you, Chandrakant. Please go ahead.
See, Indian SMEs, particularly not only in India, but the SMEs from all over the world, they face a lot of problem in this during pandemic because this is a very big impact on the SME sector. SME sector always, think about only 1 or 2 months. They don't think about 6 months or 1 year beyond because they don't, keep the stock in their premises or, they don't look at more on the cash rich activities. They focus more on the current month. They don't focus on the advanced future month. So therefore, this pandemic impact is huge on SME sector, particularly Indian SMEs. But after June, July, they have started, there are a lot of activities. Rather, we have supported many SMEs to come out with the idea that they can restart their business. They can bring their the manpower, labor, workforce to start manufacturing activity because manufacturing is the most important for the during the pandemic. And mostly the essential products manufacturers, we have given a lot of support to them to restart factory, to take permissions from the government, take permission from the central government, and channelizing the raw material exports and mostly the supply chain management. So we should thankful to the SME sector, which have played very important role during this pandemic to supply all the essential products for the need of the general people, needy people, industry, rather food product, medical product, plastic product, packaging industry, packaging sector, all have played very important. So I think the SME sector now will be coming out from all this jerk. And this last quarter, this is the last quarter of the year, financial year. And I'm confident and I'm sure that they will try to achieve the target growth because the October onwards there is a little bit development and the growth in our manufacturing industry. But this is the right time, and this is the right time to trade finance or the trade services companies to identify the unique SMEs. Those are looking for affordable and easy trade finance. Thank you.
Thank you. Thank you, Chandrakant. That was quite insightful. Now, just an extension to the previous question, how do you think Indian MSME sector is prepared to encash post-COVID opportunities, both in India as well as around the globe?
See, this is the right time to Indian SMEs to identify perfect market for them, because most of the countries denied the Chinese product. Most of the countries not buying Chinese product, and this is the right time for Indian SMEs to enter in which the market where they face a lot problem the last 10 years or 5 years. And we are, rather my SME Chamber of India and SME Export Promotion Council, we are supporting the SMEs. Those are, manufacturing quality product, competitive product, which is they are looking for best market, good market, and a huge market. And so therefore we are supporting them, and I'm sure, I'm confident that the SME sector in India will definitely achieve the target growth for the next year, and the export promotion will be happening. So since I'm pursuing the government of India with the Prime Minister, Finance Minister, Minister of Commerce and Industry, that government should play very, very important role. They should provide a level playing field to enhance the manufacturing activities. All state governments, we are working very closely, and they are also providing helping hand to SME sector for the revive, survive, and to enhance their activities and other transformation in their business activities. This is a rather important role played by my chamber, particularly to support them to perform during this next year. And post-pandemic will be definitely huge opportunity for Indian SMEs, and I'm sure that the facility providers, facility service providers, trade finance provider, banking sector, even ICICI Bank, even Raji's department also can think about, even Deutsche Bank also think about tap the SME sector. Those are looking proper hand-holding and support. Thank you.
Thank you, Chandrakant. Thank you very much. Now I come to Arun. So Arun, tell me, how committed are global banks such as yours to bring investments in India that is slated to grow at 11% and more in 2021 and thereon?
Anand, if you see, I think the Indian economy, the massive size of Indian economy and the growing middle class has always been the attractive points for foreign banks, global banks in India, with more than 46 of them now providing, touching about 6 to 7 asset base. I think there is a lot of room for global banks in India. Now, if you look at the post-COVID scenario, the trends that we see, the key development areas emerging are manufacturing, infrastructure, technology, innovation, pharma, and exports, all linked to trade finance, and supply chain activities. Global giants are already showing a lot of interest in the government-led incentives which have been announced. And I think global banks have a significant role to play here, being a facilitator, and they have a key responsible role to play here in terms of assisting this whole and bringing this whole supply chain back to its foundation. So clearly, from a global bank's perspective, there is a lot for us to do here. And if I look at the different kinds of initiatives the regulator is taking and the government in terms of, let's talk about the TREDS, which is a fantastic platform for providing finance to the SME sector, which Chandrakant was just mentioning. It's a hassle-free setup, and global banks like us, they do not want to get into the operational hassles. And what they look for is for a clean platform where they play the role of a financier, and that's their strength. So this is where I think global banks like Credit Agricole will show a lot of interest, and we keenly looking forward to growing.
Thank you, Arun, and I totally agree with you. At any given point of time, having experience in 20 different countries is certainly an advantage for an institution to work in a country like India. That really makes the processes more seamless, the experience more scalable and global in nature. So yes, I totally agree with you. From there to my second question to you, Arun. COVID has shaken people out of their comfort zones. Automation, work from anywhere, and cutting edge contingency planning is no more subject for debate, but a matter of necessity. How have banks improved their processes during this pandemic?
So it's more about digitization and automation, and let's be honest, these are topics which banks or even institutions, large institutions, have been looking at and working on even pre-COVID. But I think the pandemic has taught us all a lesson about business continuity. That's been the key lesson I look at, and that's where technology has a lot to play here. And it's going to be the key element in ensuring stability and continuity. For banks like us, there have been a lot of initiatives on this front. It's just been expedited. The adoption rate has, increased multifold. You talk about e-platforms or e-signatures or multi-bank platforms. I think these have just grown at a much, much faster rate. What's key here is also the dangers it brings in terms of fraud and in terms of susceptibility of the different engines. So that's a key area which banks are now focusing on to ensure there is no more disruption to this seamless experience. And I think that's where most of the investment, most of the banks are investing in terms of, let's say, RPA or artificial intelligence. We for Credit Agricole, I can tell you what we are doing. We have totally integrated the entire back office processing in terms of efficiency and smooth integration. So that's a lot of investment that has happened over the last 1 year, and we are already seeing the results. So post-COVID, these are the key areas I think banks are going to be focusing on.
Sure. Thank you, Arun. So now I go to Garima. Garima, no one knows the pulse of hinterlands better than you. As you said in your introduction, you move grains, pulses, sugar, cotton, and many other agro commodities from 13 plus countries around the world. Tell me how COVID has impacted the trade flow, and has it changed the mindset of consumers?
Thank you, Anand. And the food and agri sector is very interesting. So the first thing that I would like to share with everybody is that what we have to understand that enough food is available globally. But what COVID has done is it has disrupted the supply and demand, or let's say the entire logistics and the entire supply chain management in very complex ways. So although the food was available globally in ample quantity, and also, coming from a backdrop of, let's say, very extreme, fragile economic conditions, the pandemic created disruptions on an unprecedented scale. So there are certain things that we saw during this time and are still witnessing the same. So number one is that we have seen a huge disparity between origin and destination markets. What that means is there are several food importing countries worldwide. And so those countries became very defensive. And we saw a change because a stock building started happening at most of the destination markets. So importing countries started to have more pipelines with them. And therefore, they became very protective about the entire situation, keeping food security in mind. Number two change that we saw is that, let's say maybe for the last 2 decades, all of us have been talking a lot on globalization. But this entire pandemic has brought a lot of focus to nationalism and regionalization. And, the entire Southeast Asia sector is looking at each other to support one or the other geography and to take care of their food requirements. So I see that the regionalization has picked up, and somewhere it is going to happen. For example, the regional tenders are going to pick up in the next few years rather than the global tenders. So that is the second change that has happened during this time. Number three, people had expected a huge demand destruction. That has actually not happened, and demand has revived now, and very quickly it has revived. And I think markets were not ready for it. So now what is happening is, because of the dollar printing, and it has led to a huge money flow into the commodities. So now more money is chasing less assets, and that has caused, let's say, a significant gap there. Also, what has happened is, because of pandemic, there were labor shortages, people were going home, and so therefore a lot of investments, I would say, got slowed down, whereas demand has suddenly revived back. And so therefore the gap of investment will take about a year or so to fulfill, and hence we are going to chase this market. So overall, I think the supply and demand gaps, there are imbalances today. First, they were more from the supplier side. Today, it is more from the demand side. And I feel that this demand imbalance is now going to take a couple of years to go back to normal. A very specific example is the shipping. Because of the pandemic, the crew went idle, and the vessels were sitting idle. There were no movements. And suddenly, the demand has come back. And therefore, the freights have gone up like 50 to 60% world over, which is significant. There are vessel shortages today. And so how to move the grains or the commodities from one part of the country or one part of the world to another part of the world. So these are some of the trends that I wanted to highlight. And another thing you ask is how the consumer mindset has changed. I think consumers will be now better prepared. They will be more protective. There will be a need for more safe and hygienic food to be available across all the geographies. So yeah, these are the things I wanted to put across the table today.
Thank you. Quite insightful, Garima. Now, please comment on some of the significant policy changes that will usher in, more changes in post-COVID phase. I mean, we have seen, some amount of protest or whatever you want to call it, pertaining to agri policy, which government just announced. Do you really see, all of this working in the right direction? And, what is the estimated output of these changes that government is ushering in India?
So let's say, the COVID is like a tail event. Now that requires exceptional response from the government, not only in India, but world over. I would say it this way, that the governments have stopped thinking about deficit at this point in time. Rather, they are, number one, thinking about food security, because especially in India, we have a huge population to feed. And number two, government is also putting a lot of efforts to ensure that the growth engine is absolutely on, and it is moving towards a growth economy now. So as you say, the policy, I think there will be a lot of populist schemes coming up with various measures that have already been taken by the government. For example, there are guaranteed monthly incomes. There are free food being distributed. We have seen certain schemes ushering in last year. So I think the schemes will be focused on, let's say, focused on feeding, or more from food security point of view. What that impacts us as a country is, so we have to understand it from a perspective that India is a consumption-driven economy. We are not really an export-driven economy, especially from the food and agri sector point of view. And therefore, government has to take care of its farmers. And so therefore, anything that can help the farmers or support the farmers, we are going to see those kind of policies coming in. For example, also there are certain migratory labor policies that have come up. What that is going to impact is that there will be a shortage of labor in the urban areas. Specific to the farm laws, I think, it's a very touchy topic as well. But as far as the farmers are being taken care of, those policies and everything are in the favor of farmers to ensure that there is a free market for the farmers and they get the best realization. So, I mean,
more of populist schemes towards more of food security. So those kind of changes and initiatives we are going to see from the government. If not, we are already seeing it actually.
Thank you. Thank you, Garima. Hopefully we'll come back to you and we'll ask you more questions. But before that, I would like to go to Nandini. So Nandini, you come from a ubiquitous institution, ICICI, which is present in every individual and corporation's life in one way or the other. You're the best person to answer this question of mine. Banking ecosystem is growing. It is consuming technology like never before. Every day, hundreds of tech possibilities are bringing buyer and seller closer. How does a large Indian bank like yours sees this process of digitization? Is this the new face of banking?
So I think we need to keep some trends in mind. The first trend is there is an expanding digital infrastructure in the Indian B2B space, which already happened in the payment space with NPCI coming in a few years ago. The entire digitization in domestic trade and commerce with GST and its various upgrades like the e-way bill, now the e-invoicing that is coming for companies with turnover greater than 100 crores, and the entire cross-border trade infrastructure in EDPMS and IDPMS. The second trend in this space that we see is increased technology adoption. So far, if you talked about technology, the digital sectors were IT, ITES, etc. Now we see new digi-friendly sectors such as financial services, agriculture, and logistics also. And as an outcome of these two trends, there's an unprecedented data explosion, which itself creates a lot of value for stakeholders. So one, digitization plus data itself, leads to a disruption in the B2B digital space. And we are looking at creation of platforms, building ecosystems and forging partnerships. And when these platforms will integrate, we will have full-fledged ecosystem creations. And obviously when ecosystems integrate, the connected enterprises get created. Now, what we are looking at today is to see that the COVID pandemic has fast-tracked the trade digitization initiatives. The digital transformation, as I spoke and Arun also referred earlier, that we have witnessed in such a short time frame is not something that we would have anticipated this time last year. For example, the digital services exports for Japan notched up a year-on-year increase of 80% during the January to April period. And many firms, including the global banks and tech startups, have been investing heavily in development of appropriate tools. API, plug and play, blockchain, etc. All of these, I think, are becoming the norm. So in ICICI, we have always, believed in leading in the digital space. Our work in this in the space of retail banking has been path breaker in the past. Now, in terms of the corporate space, what we are seeing is corporates are no longer looking at banks at only being their partner for funding. The changing macroeconomic terms shows that the corporate ecosystem is undergoing a transformation. There's this widespread digitization, speeded up innovation, new demands for integrated propositions, and a whole new need for embedded banking. So if we want to look at the ecosystem approach for driving, value for the customer as well as the bank, then we need to take the entire bank to the customer and not a brick and mortar one. It has to be a complete virtual bank that you take to the customer, where you leverage advanced technology with embedded and integrated solutions. You connect the entire value chain together, be it the customer, his customers, dealers, vendors, employees, the full network of interlinked entities. And, with the bank being the key link. So this will be the new form of 360-degree ecosystem banking, I think, in future, which will be, having a basic underlying layer of technology and data analytics. Using both these, you will be able to generate revenue, and look at new avenues of income. For example, in a very large corporate, we have offered bundled customized banking solutions, all technology driven across each business segment, digitized embedded trade and payment solutions, collection norms, and the entire supply chain, plus the retail products to its employees. So while I'm not at liberty to discuss specific names or numbers, I can assure you, the entire relationship value that we ascribe to this, as well as the corporate on the other side, has undergone a multiplier effect. So the bespoke solutions that you do in a 360-degree integrated solution through hyper automation, and you connect the parties on a single platform through blockchain, plug and play APIs, making the customer journey simpler by bringing together all banking needs at a single place, is the way to go ahead. And more banks will adopt this, I guess, to drive growth. Obviously, whoever will be first off the block will have the first mover advantage and will, generate those gains for some time. But again, technology is a great leveler. So at some point of time, this will also become hygiene. And then we will have another frontier to conquer.
Yeah. Thank you, Nandini. That is certainly a new face of banking. Now, coming back to a question pertaining to corporate bank, one of the biggest gaps in corporate risk management is non-availability of insurance to banks. Don't you think the time would not have been more opportune to introduce it now to help scores of MSME clients in India?
So in countries in Europe and APAC, they follow the exports-led growth model for the economic development. And there we've seen factoring contribute immensely to their GDP growth over the period. There are factoring companies who rely on trade credit insurance to support protection and financing to steer the growth. Now, just as a comparator, the total international factoring volume somewhere in APAC was about euro 145 billion some 2 years ago. And international factoring volume in India was about €500 million, which is half of what Vietnam did that year. So that is just to give scale. So there has been an increase in the factoring portfolio in India, I think after the Factoring Regulation Act and subsequent issuance of RBI guidelines in 2015. But banks, as you said, are constrained right now by not being able to take the support of TCI to boost the sector. So RBI and IRDA have taken some baby steps in this regard, I think. For the MSME receivable financing, we were part of the sandbox testing along with Rexil, who's the TREDS partner and a large insurance provider. Now, from the insides of the working group, I can tell you that there are changes that are happening. The working group has submitted its suggestions to the regulator. The comments of various stakeholders have also been received, and we should expect a decision in this regard. Yeah. So there are some changes which have been suggested in terms of indemnity to be provided to the insured. Should, the percentage should increase, and depending upon whether it's a micro or a small industry, whether we could increase it even further. And insurance companies, whether they will be able to offer a wide range of credit insurance with to boost the SME and MSME sectors, to allow a single buyer risk covers rather than the whole portfolio. The working group has also proposed that the buyer default database should be created with the Insurance Information Bureau so that we keep a check on defaulters and have a better pricing process. So just like, CIBIL database can be accessed, there should be an IIB database. So in India, credit insurance market has been, dominated over the years by ECGC, a specialized PSU insurer. And I think time has come for opening this up, which will help in terms of scaling up the export promotion boost for the country. Yeah. Pricing would get competitive, and that is very critical for an MSME or even an SME. And the enhanced risk covers will help, look at new markets, look at new buyers. And that will definitely give a boost to the exporters' ability to capture newer markets and grow their exports, which I think is obviously very critical for the country. So trade insurance, if you ask me yes or no, there is no question of no. It's a matter of when. And the sooner it is, the better it will be.
Yeah. Thank you, Nandini. No question of no. That's a good that's a good note, to end the predicament that industry is facing at this point of time. Let us hope for the best, and let us hope for the best very soon. I'll go to Raji now. Raji, before I hand over the mic to you, I will quote Bill Gates here, who once said, banking is necessary, but banks are not. You come from the industry that probably put this thought in his mind. You guys are forcing a traditional business to reinvent itself, and I'm convinced after listening to Arun and Nandini that this reinvention is happening and benefiting consumers all the way. Tell me, from the perspective of a global fintech company, how do you see India? A land of opportunity or a land of chaos?
Absolutely a land of opportunity right now. Amidst the chaos, there is always opportunity. But you're right, Anand, we are in a digitization economy, and the world is moving towards, continuously moving towards digitization and technology, and that's a good thing. Now, I'm going to step back a little and, having heard all the panelists here, just, stepping back a little and restating the very obvious, which is trade per se is complex, right? There is flow of goods, flow of money, flow of contracts, flow of documents and several parties involved. That itself, it's complex. Now, when you look at that, add cross-border trade to it. Within the country itself, it's complex. And now when you have to get into cross-border trade, it becomes even more complex because there are 2 or more jurisdictions that come into play. So obviously the complexities increase. And of course, throw in the pandemic that is there right now, life is a challenge when it comes to traders. But this is the best part about digitization here, and I'm going to get into what other countries are also share some insights on what other countries are doing. But before that, what the platform does, which is what our platform is, dltledgers. As I mentioned earlier, it's a private secure network. So what happens is, and here the trader is the king. So the trader or the large enterprise or the SME decides who he would like to bring onto the platform, bring in all the counterparties one by one, doesn't have to be everybody together, bring in the counterparties, collaborate, exchange of documents, and make those documents as something that is approved to carry on with business is something that we are looking at, and making it very easy. So the platform is basically bringing in, like I said, counterparties, as well as, making it useful for, otherwise there is digital islands in different organizations. How does everybody see where the product is at this point in time, where the good is, where the documents are stuck, where's the transparency, where's the visibility and all this, and that's where the platform comes in. Now, before I go on to explain what the platform is, I just wanted to, many of us who are listening to this would have heard about a platform like this and blockchain, of course, and the advantages of blockchain. But I just wanted to say that from a dltledgers point of view, this is not part of any consortium. It's a private company. There's no platform today which is handling end-to-end trade digitization. There is no one single platform. There are trade finance platforms, there are EBL platforms, etc. But having a visibility for a trader from end to end, this is a great platform to be in. This is very easy to subscribe, and all the counterparties onboarding can be easy, can be done pretty, perfectly fine. But now, having said that, I want to step back and also share with what we are doing in countries like Singapore. And this is to Chandrakant's point that he raised about a government and what kind of help the government can render to this. Any kind of growth to keep the trades of the wheels of trade moving on. And we all know that technology is just an enabler, right? We need the government, we need the corporate, we need the SMEs. We need the associations all to come together and support any kind of technology that would benefit traders. So I want to take so I just wanted to explain this, what we're doing in Singapore with small and medium enterprise. The government is running a program for small and medium enterprise where they've told us, and it's a funded program with us, where we bring on the SMEs onto the platform, help them digitize, and not charging them anything. The government pays 90% of the subsidy cost of the subscription, right? So that's a great support that comes in from the customer. The second one I wanted to bring to Arun's point is the fraud detection. So the platform that we are, we have is also in the pilot with Singapore with MAS, which is a regulatory board, and several banks have come onto it for fraud detection. Fraud detection, as we know, is one of the most debated issues in trade finance. So technology can be used in various forms, and I think it is about time that we accept it. And no matter what the nuances are, what kind of apprehensions and what kind of resistance is there, I think all that can be ironed out. Get in touch with whoever your partner from a digitization point of view is, and I think the country should be perched at, that's where it is. COVID times, and this is not going to go away, as we all know. So how do we keep everybody, and how do we keep the wheels of trade moving? Digitize. Please use a platform that can bring together counterparties for visibility, transparency, speed of completing the transaction in business, and also help trade finance. For the banks and for the SMEs, the banks can actually get visibility into the different layers of supply chain with a corporate. Now, wouldn't a bank like that, right? And if an SME is on blockchain, I think because of its authenticity and transparency and consensus-based thing that happens on blockchain, finance houses would be, happy to fund an SME or an enterprise which is on a blockchain technology, I'm sure. So, yeah, so there is lots that can be done, and I think we must move our best foot forward when it comes to adopting to technologies. We from dltledgers, we are nimble, we are agile, happy to adapt and go. So, bringing all the parties here together would be great. Anand.
Thank you, Raji.
Yeah.
So that brings me to the end of our panel discussion. I would like to read out some of the questions that I have received in the meantime from audience. And I would like to put forward the first question to Arun. So Arun, audience would like to know, how do you see adoption of trades? The speed with which its acceptability is growing, both amongst the financiers as well as the anchor clients and the suppliers who are getting onboarded onto the platform. Are you happy with the pace, or something can be done like that?
Thanks, Anand. Initially, I guess the pace was a bit slow, but obviously, given the pandemic, maybe it has received a boost. And frankly, the platform per se is fantastic. I mean, we are very, very closely examining it, and we expect to go live in the coming days. And from a financier's perspective, as I briefly touched upon it earlier, it essentially meets most of the supply chain platforms run by global banks, as far as KYC onboarding goes, and all the other elementary checks on transactional documents, etc., etc. So the bank's role is limited to being that of a financier. So it's a no-brainer as I look at it. And for banks like us, who are much smaller in presence in India, it's a must-have. And given the whole priority sector angle which the regulator provides, there is so much more that can be done. So I think it's here to stay, and it's here to grow exponentially.
Thank you, Arun. The second question goes to Nandini, and the question goes like this: that trade credit insurance typically helps financiers. I think there is some typo here, so I can read out the essence to you. So so here they would like to know that which type of corporates will benefit more from this product, and will bank take the initiative on low-rated corporates getting onboarded by trades? Nandini.
So is it a trades question or a TCI, or it's a mixed question on trades?
It's a mixed question. I think you can leave apart TCI because that I'm not able to understand. So I think the second part of the question is more relevant for you.
So I think this is a question which has come up in terms of lower rated corporates. See, I think a return of capital is very dear to every bank, every financing institution. So if it is a low rated corporate, there's obviously, a proportionate decrease in credit appetite. Will trade credit insurance change that? It is too early to speak about that now. Trade credit insurance, the premium may be higher. So there will be a linkage to the credit rating for every borrower. And I guess, therefore, that will be a factor in terms of what banks decide to finance with or without trade credit insurance. I think right now, trade credit insurance, the way we are looking at it is to have an additional comfort. We will see whether we get capital benefits out of it at some point of time. And then I think all these things will come in. So right now, I would say it's too early to comment. But on a generic principle basis, anybody who is lower rated will obviously attract less capital.
Thank you, Nandini. And yes, I totally agree with you. I myself, coming from the same background as you are, there are a lot of other ways in which this problem can be tackled. But the first step probably would be the availability of trade credit insurance or the insurance policy to the banks. There could be PTC structures also that banks are working on in other parts of the world. But all of that would be probably phase 2 and phase 3. But the important first step will come once the availability of credit insurance would be allowed. If not on the bilateral basis, maybe at least for trades that will enable banks to take calls on some of the lower rated corporates. Great. So maybe you hang on with me for a few more seconds, because one more question pertaining to trades has just dropped into my inbox, and that basically would want to understand from you that the margin which is available on trades, is that more competitive as compared to bilateral lending? Nandini, how would you like to comment on this question?
So, trades is a price discovery model, right? So in a price discovery model, there is always an element of surprise which is available. So the whole objective of setting up trades for price discovery was that MSMEs would get a better rate of finance through multiple bidding process. And I think what I have seen in the limited Rexel or the other two trades platform, that the rates have tended to be more fine when it comes to a multiple entity bid. So the answer is yes, the rates look much better on trades due to multiple bidding as compared to a bilateral arrangement. Not very good news for the banks, but definitely very good news for the MSMEs.
Anand, let me come in this here. Can I speak now?
Yes, Chandrakant, please go ahead.
Yeah. Let me share my thoughts on the trades platform. Rather, when Raghuram Rajan was a governor, and I'm pursuing with him for the change of the definition of the NPA for the SME sector. And then he has suggested me that we want to bring some platform, the trades platform introduced by him. And this is my efforts to bring the trades platform on live. This is my efforts for bringing that. And now we are pursuing the central government that all corporates, those are buying product from SME sector above 100 crore turnover, they have to register. The government is insisting 250 crore, but I'm insisting at least 100 crore above companies, those are buying from MSME sector, they should register. And this is a good platform for the banking perspective and SME perspective, where banks can play important role for lending, and SME can take their receivables in a short time without any hurdles. But there is some hitch. There are a lot of SME, a lot of corporates or the buying companies, they insist the SME sector that you don't want to register on the platform. We will give you payment in 45 days, 30 days, or whatever it may be. So you will be continuing our supplier, not for one time. So this is also huge, but we are working with a lot of SMEs that, encouraging them Whenever you supply any company, either 1 time or 10 times, you insist them to come on the platform. And this is a good for a banker's perspective.
Absolutely, sir. Okay, thank you very much, GTR team, for providing us this opportunity. And I really thank each of my panelists for taking out their time. And this was really quite an engaging session. As Nandini said, we really look forward to next year when we all of us can come together in one room and face to face we are able to interact with the audience.